Hello everyone, sorry about, that just now. Just that's just me trying to, get a clearer picture for you guys, which seems to not be possible today for some reason. I don't know why, if it's because I'm on my other PC. Usually on, my other setup, which is somewhere else, it's more clean. So I think, maybe either later tonight or tomorrow we'll try to use the other setup and we'll see if that's the reason why the charts aren't as clear as they usually are. Okay, so anyways, and once more, sorry about this if it's blurry right now. No idea why it's like this, but we'll get it fixed. So on the screen right now, you guys can see that we have Forex Factory, right? And just to make this easy to understand and as clear as possible, the times when you will have sequential SMT, and you remember that sequential SMT has two legs, well, two main focal points, right? It's either a low then a lower low, or a high then a higher high, or vice versa for swing highs and such, or failure swings. Those two focal points are usually formed whenever we have volatility being introduced into the marketplace. Usually we have those focal points forming wherever we have news events. So for example, right, the low of the week for the dollar, right, I believe that it came in, when was it? Wednesday? Not Wednesday. Was it Tuesday? I believe Tuesday or Wednesday. It was Tuesday or Wednesday. One of them. Right. I believe that for one of the instruments are the data providers. One of them, the low of the week was Tuesday for the dollar, and another one, the low of the week was Wednesday, which that was also a cracking correlation, something that we talk about, right? And today, which is Thursday, we had a continuation of that move, which was established on Wednesday across most asset classes. And today's Thursday, and tomorrow, we already know what we should expect. Price to pull back in the range only if there is sequential SMT, right? And if there isn't, then we will expect price to continue, going higher for the dollar, which would send you the euro down and the Great British Pound down. And I hope that this isn't confusing to any of you guys. So here, right, at least this should be clearer, right? This should be easy to see, easy to understand, right? This should be better than the first chart. It's not 100% clear, but it's better. And I am mad like to just do this over after today. So maybe later in the week we'll come back at this with this same lecture again. So to the left, you can see that we had the dollar index, climbing higher throughout the entire week, right? It's just during, the first day of the week, which is Wednesday, Q1, that we had price, fall into here, which is a daily fair value gap, which we will see on the next chart, right? Within this, area, we had, already know what this is, sequential SMT. Right here, we had price forming a failure swing, which failed to take this low out. And if you remember, when we did the live stream right here, we expected price to go higher. right? We expected higher prices. That's exactly what we expected, right? And remember what I always say about the true week open is very crucial. Here you can see the price just fell below the true week open, and that's when this precision swing point right here was formed. Literally, the literal low, you know, well for very close to the low of the week. Let's just say that, right? It's basically the low of the week, but it's technically it's not, but it's very close, right? And this is what you always want to see, right? This Judas swing, right? This fake move, right? Price is already extended on Monday, and this has the same, you know, not properties, but it does the same thing as even if we have consolidation in Q1, right? So the lesson on YouTube, just simplification, right? It's literally nothing. We usually expect AMDX and XAMD, but you can get XMD, right? Which is here, and that's what it actually is, right? It's AMD or XMD, right? And this is for you to understand, not anyone else, people that are outside, right? This is for you to understand, right? The thing that makes M appear is the cracking correlation here. If you realize every time, right, and this is 90% of the time, and I believe that I've said this before, 90% of the times, the low of the week or the high of the week is caused by this exact thing. You can't go around it. It's always there. Right here is perfect. Look at the Great British Pound. And remember, this is not hindsight, and I don't know who would want more than this, right? If you realize, right, when I just started, I was more hands-on. And why do I do that? Why was I like that? That is because you were not, grounded in the information. You did not understand yet. But now you understand. And you guys, I don't know if you see how much you're improving, but I do, right? I've been watching some of your guys, posting your shorts from day one. The ones that are like grinding, always posting their shorts, right? Some of them maybe they're not trading, but they're you're getting very good. Literally, I've seen a bunch of you guys post this when price was here, right? By just listening to me, saying what you need to wait for this sequential S&T. I expected price to go higher. That's what I expected. Higher prices for the dollar, which means what? Lower prices for the euro and lower prices for the pound, right? Here, where we see the sequential S&T, what formed it low after the sequential S&T, commenced? What signified that this was sequential S&T? Right here, what did we have? And this is the weekly cycle. For the weekly cycle, we use this exact time frame, the 1 hour time frame. We had a 1 hour precision swing point form right here. Right? Then what? We had expansion. And once you have this and you see a fair value gap form, that's the real fair value gap. Like this right here is what you should be focusing on. Right? And after this, you see a precision swing point forms here as well. Right? And let me turn the cursor on. Right here, you can see for those, there was a person asking what a precision swing point is. I don't know why, but this is what it is. Right? Here you can see, we have a up close candle for the euro, but in the British pound, what is that? That is a down close candle, right? So this right here is a precision swing point. Here we can see that, this formed a gap, right? This is a gap right here, a fair value gap. A fair value gap was not formed in the British pound. And due to the fact that a fair value gap was not formed in the British pound, what would you expect? You would expect price to run above this high again, right? That's exactly what you would expect. Price to run above this high right here. This right here, it's a correlation. Of course it is, right? But this is SMT, but it's not sequential. But due to the fact that we already had sequential SMT before, right? And we had a lower range of sequential SMT, which is, this is basically us just noting the number of candles, right? So the larger the range, the more effective we have. After this, we had price fill this gap, price fall into this gap, but here price close above, this high. This signified that, we are, in bearish conditions for the British pound and the euro. So this right here is specific, right? It's not just a high. It's not just a, oh, there was sequential something. No. What else is it? What? This is a precision swing point. And, that's important to understand that. And I know now it doesn't look, well, of course, most of you guys probably already see that it is important, right? This precision swing point is important. So focus now. Whenever you have a precision swing point and one asset closes above it, right? While the other one doesn't. That is quantified SMT. Do you understand? So right here, you're going deeper. Why would you expect this to hold? Is it just because this is a fair value and price per group? No. It's because it broke above the precision swing point. You're going to get explosive moves afterwards. Do you understand? We have one precision swing point here, which is, which pierced this high, which created, sequential SMT. We had hidden sequential SMT here. It had to go lower. Then here as well, at these highs right here, what's there? Like, it's right there. It's like right in your faces, right in everyone's faces, and they can't see it. And it's crazy. Right here, we have SMT again. It's insane, right? This is the high of Q4. What is this? This is the high of the Asian session. So as you guys can see, it sequential SMT can occur between the afternoon session and the Asian session, the Asian session, and right. And if you go on a lower time frame, you'll see the close right here. It's just because we're on the 1 hour time frame. So if you would drop right here, and go lower, right? The 5-minute time frame, you'll see, we did close above this high. Which usually that is not necessary, right? If you have this right here, this sequential SMT, right? Only the first sequential SMT, most times, need a close. It's not that it needs a close to work, right? That's just what makes it high probability. Do you understand? If you remember, right, we noted this low, we noted this low, and we noted this high. And, we even have a higher level of buy-side liquidity for the US dollar that we also noted. Here, what do you see here? Here we have this fair value gap in the British pound. Did price return to it? No, it did not. Here. Right here, this is the exact candle, right? And then here, we have another fair value gap. And here we have, this is a fair value gap that I would, focus on for the US dollar index, right? We had price barely touch it, I believe. Well, here, if you see, price did not go to this gap. Here, price returned to this one. Here, you can see that the gaps are displaced. They're misplaced, right? And this is probably difficult for, you guys to see, but right here just look at the cursor, right? This candle for the British pound did not create a fair value gap. This candle for the euro created a fair value gap. Here, this candle right here, the one that you should focus on, that created a fair value gap, but this created the first fair value gap for the British pound, right? After which we had price return to this fair value gap to the euro and just, continued lower. Whereas here we still did not have, price return. This was a precision swing point and a precision candle. It's a precision candle for the euro and a precision swing point for the Great British Pound, right? After which we have another precision swing point and precision candle form again. So here, all throughout here, there are cracking correlations. What does that mean? Do you need to be trained at under 1 hour time frame? No, whenever you see price, and pay attention to this, you'll find out about things on your own just by doing this. Whenever you see anything out of sync in price, it's important, right? But what's the main important thing right now? But literally, what's the main important thing? The two stages that happen here, right? That's the sequence, right? And remember, we had the true open here for the assets, right? So this candle right here, this opening price right here, that's the true open of the week for the pound. So this is what you should be focusing on, right? And it's without, me drawing, the lipstick on the chart, it would seem that nothing is here and something actually is here, right? We have the true open here. You already know the rules for the true open. Price trade above this high. A precision swing point formed. Right as this happened, the markets just kick in bearish mode. Right as this happened, obviously you'd have your stop somewhere here. You already remember how I showed you guys to, measure that, right? Using this swing low right here and this swing high. Here, price traded up into this fair value gap, couldn't break above this precision swing point, which in itself, this is a pattern that repeats, right? Literally, a precision swing point will form here. You'll see it next week. You'll see it the other week. You'll see it the other week. You'll see it, the next session, right? On lower time frame, this is what happens, right? You have a cracking correlation, literally, right? Between two quarters, price goes above the true open. There's a precision swing point, right? Then price trades up into this gap. Right here, you'll have price trade above here, then just fall. You don't need that to happen for it to fall. Some of you could just wait for this to happen the second, the lower time frame cycle's cracking correlation right here, which occurred when? Between the daily cycle. So here, we had a cracking correlation on the weekly cycle, then followed by the daily cycle. And this is the, best way to trade, best way to learn how to read price, by following this. Does it happen every day? No, it doesn't. But when it happens, it's clear. It's clear as day. Again, let's go over everything that you need. A cracking correlation between the weekly cycle, between 2 days, right? Here we're about the true open. A precision swing point was formed. Price broke down. Price returned into this. I remember, if you realize, gaps only work when we have precision swing points within them. Not precision, well, yeah, precision swing points and or sequential SMT. So a cracking correlation must occur within the gap for it to hold price. It's not just going to, go up into it and just drop, right? If you go down to the lower time frames, you'll always see that there is a cracking correlation, right? There is always one. Even here, there's a cracking correlation. It's just on the lower time frames. Here, you can see that this candle right here, right, this high is higher than this candle, whereas, and now we're focusing on the euro, this high is higher than this candle, right, to the right of it, but in the pound, this candle is lower than the one to the right. That's a correlation right there at the top. Do you see? So this is a model in itself, and I gave you guys, model number 2 already. This one will be, posted shortly. I just need you guys to be, going through your charts. Go back through this. If you didn't catch the move a lot, you need to focus on the, in the chats. You have, some of you that are very, extremely experienced, very good. Analysts. Like some of you are very good, right? Some of you don't miss. Here, I believe this is a chart that we were focusing on right here. And let me do this and show you guys something else. Around the daily chart first here. Google and look at the other chart as well, of course. If you guys remember, right, when we were looking at the daily chart, here there was a quote unquote cracking correlation, right? But right, we didn't take this seriously. We still expected price to come back and gravitate to these lows, right? First thing first, right here, one of the most important things, this is what a precision swing point, right? This is the up close candle in the Great British Pound, and it's a down close candle in the euro. Daily precision swing points are, almost, I'd say almost infallible, almost, right? Wherever we have precision swing points on the daily chart, we usually have price reversing. Like for example, right here we have this up close candle in the US dollar index, and if you don't really understand the US dollar index, everything right in the US dollar index should be the opposite. In the euro, everything in the euro should be the same for the Great British Pound. So once you have a cracking correlation, price should reverse, right? So we have a precision swing point here. Then we had another one right here, right? This is a withdrawn liquidity, right, for the US dollar, right? And I'm never like two-sided with these things. So it's literally either I'm right or I'm wrong. So like, for example, we expected this to happen. We expected the US dollar to rally. We expected the euro to drop and the Great British Pound to drop. Right now, this is a withdrawn liquidity, right? Right? These highs right here, these equal highs right here, that's a withdrawn liquidity. And that would mean what? We would have some type of manipulation again, which would send price lower, within the euro and, somewhat lower for the British pound. Here, this is our, main draw on liquidity right here. Again, right? These equal highs. Right, so it's not that, okay, we're waiting for a price to just, trade and drop within this quote unquote order book? No. We just need to see a cracking correlation followed by a precision swing point. That's what we need to see. So once we see a cracking correlation, a precision and a precision swing point, it's go time. Two stages of cracking correlation. So for example, you could have a cracking correlation within the weekly cycle, then the daily cycle, or the daily cycle, and then the 90-minute cycles. Right? That's what we're looking for. Right? Before we ultimately have price draw to this high. 106.169. What? 106.169. Right? This high right here. Here you can see that, we already stated that the markets were, low probability for the index futures. And that was, showed here in stunning fashion. Right here we have the Dow just, dropping. Here we had the E-mini NASDAQ rallying. And then right here, we just had, some of the worst price action you'll see, which is actually not a bad thing, right? Because now we have what? We have buy side liquidity here for the E-mini S&P, and we have sell side liquidity here. So once one of these sides get purged, right, and there is sequential SMT followed by a precision swing point, the true open is respected. It's it's used by the market as how we want it to be used, how we expect it to be used, right? Then we would expect a reversal. So that's literally what it is, right? Anytime you see a cracking correlation, sequential SMT, precision swing point, that's a model in itself. That by itself is insane. And it's very difficult, and this is why you're special right now. It's very difficult for someone to understand what a precision swing point is if they haven't been around us for months, if they haven't seen it in action, right? It's hard for them to believe. And that's good for us because that's our secret weapon. The precision swing point. It's everywhere. Most times when there's a high of the week, it's there. Most times when there's a low of the week, it's there. Right? Even here. What's this? That's a precision swing point. Do you see that? Even though this rally was, faint in the E-mini Dow, is a precision swing point. It's always there. And it will always be there. Sometimes I ask myself if Michael actually knows that this exists. Right? So I hope that you took something from this. And the models that you have, model number 2, the Monday expansion model, you need to put those if you can, draw them yourself, print it out, put it on your wall, and study them. Go into the charts and literally study them. Right? You can see that everyone that has been putting in the work is seeing, a lot of progress, success. Past all I can't even reply to all of you, and I'm very proud that just to see that it's working. I managed to convey the information to you in a way that you could understand. It's simply amazing, right? Just to see you using it successfully, just to see that you can predict market moves, right? And you don't have to be doing it all the time. You don't have to always be right. No one's going to always be right, but you can almost always be right. I hope that I, managed to clear up some things that, probably seem difficult to understand. Right now, we're still not in the best market conditions, right? We are not in the best market conditions at all, but we can still find our way around the market. So whenever it gets easier, again, whenever it gets clear, just like how, the first couple of months, and where do you remember? It's literally, oh, let's go here, price go here, it drops, price goes here, it drops, no consolidation whatsoever. Price just respects the precision swing points, price just respects the sequential SMT and the models that we have. Until next time, good luck, good trading.